Good morning, everybody. Hey, welcome to Thursday, November 12th. And hey, a couple more days this week, and the weekend's right around the corner. Thanks for joining us this morning as we get ready to talk about jobs today. What is it going to look like? What's first time unemployment claims going to be? Those are important things that Dave and I are going to discuss here in just a minute. But before we do that, I want to remind you that the markets are going up. They've had some good days. They've had some bad days. The question really is, and there's two questions you need to ask yourself. One, do I know exactly how much risk I have in my current portfolio? If I said between 1 and 100, what is your risk number? Could you tell me? If not, then you need to have a financial x-ray, and we need to x-ray your portfolio to make sure that your number lines up with your actual portfolio. Hey, the second thing I think is important right now is taxation. Are you on the right track to be as tax efficient as possible with your retirement accounts? Does it make sense for a Roth conversion or some other tax savings things to do right now? That's another thing that I think we can help you through our financial x-ray. So give us a call, 863-382-0037 to get started that, or you can go to my website, statlerfinancial.com, click on the button there that says schedule now, and you can schedule time with me that's convenient for you. So, hey, Dave will be here in just a minute. Looking forward to our conversation today, and should go well.
39. It's 21 here before 9. Time to check in on your money and see what Wall Street's doing to your IRA and 401k this morning. Kind of interesting. We were all thinking greener than green yesterday, and the part of the market that was not green yesterday morning too much turned out way green, and the one that was really skyrocketing turned red. I don't get it. Phillip Statler's got a few ideas. Let's check in and see what's happening from the resources of Statler Financial Services. Got Phillip Statler on the line. Good morning, sir. How are you?
Hey, good morning, Dave. Doing well today. Yeah, yesterday's kind of a mixed bag, more to the green than it was to the red, but still somewhat a mixed bag.
Yeah, it was interesting. I mean, the Dow was outpacing everything else for the last couple of days, and it ended up slightly in the red. NASDAQ, we were a little cynical about, and ended up over 2% yesterday at the close. S&P was kind of in the middle, up 27 points, but it's almost a mirror opposite of what we were looking at the futures early in the morning, isn't it?
Well, it was, and let's face it, the NASDAQ had gotten beat up for a couple of days there. And so I think it was a time where, from a technical standpoint, there was a trough, and so traders came in and started buying.
You're kind of thinking, as much as anything, the big money program traders more than anything else for that reversal yesterday, huh?
Yeah, especially on the NASDAQ.
Understood. Hey, we are concerned about stuff. We're still nervous about the COVID-19 stuff, and that always causes volatility. We've had a couple 3 days with record national case count numbers, and we're not exactly as pretty as we once were in Highlands County either. That's going to take a toll over the next day or so, I'm betting, isn't it?
Yeah, it really will. It's our numbers did skyrocket, and so I'm gonna just put it out there, Dave, that I think that our with Dawn going to be gone, that to me, I looked at that on a daily basis to see how many people were in the hospital, because that's the number that was most important to me. And I think when we don't see that, we get complacent out there. And so I think that's what's really hitting us is complacency, and we need to be more diligent about what we're doing.
I did notice the county board is now back to at least doing their text message service with weekday updates on the COVID count. So I'm kind of keeping track, and I think we were up to like 50 people in the hospital the other day in Highlands County, and
yeah, it was a little bit over that, Dave. It was like 56.
Yeah, it was up there. I noticed that. I don't remember the exact number, but it was scary high compared to what we had for a little while. And you're right. I mean, Don Elwell's called it COVID fatigue, and I don't think it's a bad term, but it ain't gone away, and we're getting a little mini spike here in Highlands County, so caution is definitely the watchword.
Definitely. And I think if people know that and they see it, then at least it puts them in front of them, and they'll be a little bit more, hopefully proactive in being careful about what they're doing. So I know we're not here to talk about COVID and health, but it does affect our financial markets. And as we look at the futures this morning, That's what's weighing down on the futures, is that the COVID is really skyrocketing, and that's concerning the markets right now.
Yeah, it's especially bad across the northern tier of states. I've got enough kinfolk up in Wisconsin where I watch that, and that's quickly becoming a real hot spot. And there's a little recognition after party time after the announcement that Pfizer had good news on that vaccine. Somebody put it really well. There's a little bit of a difference between a vaccine and the vaccination itself, on top of the fact that now they're talking about the vaccine is not exactly the most fun thing to take on the face of the earth.
No, it probably won't be. And I think this may be another concern that I'm seeing. I'm not sure what day is Inauguration Day. Do you know?
The January 20th, that the actual final count, at which point in time President Trump will have to concede, assuming it goes the way everybody expects, will be December 12th. That's the Electoral College date.
Gotcha. So I mean, I'm looking at some articles, reading some stuff, and just one of the things that is, I think, could be weighing on the markets too, is that maybe January 21st, that we have an executive order signed, basically locking us down for 4 to 6 weeks. That's what's coming out of his COVID cohorts there, and what they think need to be done.
Yeah, politically, I'm not 100% sure that the first step in the transition for for President-elect Biden, I'll use the term the press is, I'm not sure politically that's the best thing he could have done, to be able to announce that task force as his first thing and start leaking out ideas and recommendations.
Me either. But I got to think that's one thing that the markets are certainly not happy about.
Absolutely. Yeah, I'm hearing all kinds of rumblings, and I kind of take everything that leaks out of a transition team or a campaign as much as anything as being leaks and just that. So I take it with a big grain of salt, because stuff has to get through Congress and has to make it through the public vetting before it actually happens. But still, the leaks are concerning to businesses that are COVID sensitive, right?
Absolutely, and there's a lot of them that are more COVID sensitive than what people believe when you have to start going back home and staying home.
Absolutely. Start out the morning with some macro news, and we were noodling it through as we started out. The Consumer Price Index numbers came out, and under normal circumstances, we'd say, hey, a pleasant surprise, lower inflation, that's good news. But we were kind of noodling it through because an uptick in inflation also indicates consumer demand. Our consumer inflation rate for the last year, annualized off of the October report, was 1.2%. And the core, once you get rid of options like food and gas, it was 1.6%, both of which were pleasant surprises to the positive side in a traditional time from what I had. But I'm kind of looking at that as saying that really indicates softening consumer demand, which isn't what we want to see.
Exactly right, Dave. We, the economists expected those numbers to be rising, not falling. And so you're right. Under normal circumstances, you and I would be thrilled with that. But given where we are today in our economy, we need spending. And that's really what the CPI shows. And that's falling backwards and not forwards.
As we get a little bit nervous about what could be on the horizon for us. The good news side of the fence was on the employment front. Usual Thursday reports out, first-time unemployment claims last week. A pleasant surprise, 709,000, and continuing claims almost getting down to a number that sounds borderline normal, 436. We're actually not looking all that terribly bad all of a sudden.
No, we're not. And this is the third consecutive week that we've been less than 800,000 first-time claims, which is a good sign. And that's better than expected. I mean, most of the economists had it somewhere between 730,000 and 740,000. So good news there. And I'm excited about that, because anything that's good for the labor force is going to be good for the economy. And so hopefully we can continue on that track through the first of the year.
It's nothing but good news when you've got a pleasant, even though the employment rate is too darn high, the unemployment rate's too darn high. The worry that you and I have been expressing for a long time is, as these payroll loan protection numbers run out, we were expecting a bump upward, and the fact that it isn't happening means that the economy is at the very least recovering enough so businesses aren't shedding employees at a rate that shows up in the macro numbers.
That's right. And the number we don't really see is underemployment. And I'm sure that is a factor given everything that's going on. But still, that first time claims number being down is nice to see.
Yeah, it's indisputably good news, even though I know there's a lot underneath it. And we're kind of following the U6 number that comes out later on today, too. That includes discouraged and partially employed workers. I didn't get a chance to ask, but earnings season is continuing. Any household names with some news for us this morning?
We do have a couple that have come out. We have Energizer Holdings, which is the battery company that makes Energizer, the Energizer Bunny. They missed. They made 59 cents a share. They were expected to make 81 cents a share. So that's a pretty substantial miss for them. Their revenue did beat expectations. But their CEO is going to retire in January. So some switching and changing off there. Let's see where they went. They are trading down today, almost 7% this morning.
Ouch. And that kind of surprises me because I figured batteries would probably be relatively hot during the time we've been spending more time at home.
Well, yeah, and it's hurricane season. We're at the tail end of hurricane season, but still you would have expected during that quarter that kind of stuff would have increased.
Yeah, I would think it would be a lifestyle quarter for the battery industry.
Yeah. The other one I have is Edgewell Personal Care. Now, that doesn't mean anything to anybody, but it's Schick, it's Wilkinson, it's Edge, it's Playtex, it's those brands. And they beat by 2 cents a share. And so that was good. Revenue beat expectations also. They're trading up substantially this morning, over 8.5%.
There's a whole bunch of snark I can do about shaving and broad during a pandemic, and I may just let that sit. But yeah, I wasn't familiar with the name of the company, but they own a whole bunch of household names, don't they?
Absolutely, they do. I have two more for you. Vroom, which but you don't hear about it, but I find it interesting. It's one of those used car sellers that sells cars online. But they had better than expected revenue. They had a lower loss than was anticipated, but there's a fly in the ointment when it comes to the current quarter. They gave way weaker expectations for their current quarter than anybody wanted to see. So they're trading down this morning, down almost 10%.
Wow.
Yeah. The last one I have for you is Fossil. That's the watchmaker, the handbag guys, luxury goods. They really had a good quarter. They were able to go to a profit when they're expected to lose money. E-commerce was a big deal for them. And so this morning, they're probably not on your big winners list, but they should be. They're up 22% this morning.
Wow.
Yeah.
Anybody that thought that selling conventional wristwatches was going to be a dead issue is wrong on that one, aren't they?
Yeah, they're up 22%. So nice little surprise for them.
Not bad. Resetting the table for the morning. Yesterday was, like you said, Phillip, a mixed bag. Dow was off by 23 points. That's 0.08%. So nothing to get excited about. It's just the opposite direction of what we were seeing in the morning. NASDAQ had a party time. It was up 233 points. And the Standard & Poor's hit in the middle. It was up 27 points. That's about 0.75% up yesterday. 45 minutes before we start the morning with some real money being thrown around. Which way are we going today?
Dave, I'm looking at the numbers. They are slightly improving with the jobs number that's come out and the CPI number that's come out. Right now, we got the Dow down 0.7%. We got the S&P 500 down 0.3%, and we've got the NASDAQ heading up about 0.3%. So that's what we're looking at the start of the day on these stock indexes. On the commodity side, we've got gold and silver up. Silver very slightly, like just a little over 0.1%. Gold up 0.5%. Crude oil was flat when I first looked at it. It's up 0.25%. That's $41.57 a barrel right now, and you got to like that number, Dave.
Oh yeah, but it is still about $1 a barrel less than it was yesterday at this time. I think we were about 42 yesterday.
Yeah, I think we were too.
Yeah, and still, at least it's staying above 40. We'll call that healthy for the employment situation in the oil fields. Mixed bag overseas on the Asian rim market, some up, some down, just a little bit either side of zero this morning early on. Europe has kind of taken a sell-off this morning, mostly on the grounds that we kind of ran out of steam on our run-up on the Dow, slightly to the negative side, both in Great Britain and Germany halfway through their day. Phillip, it can't control a virus, and it's the concern that's screwing with our brains on Wall Street again this morning. Got to control that risk in my retirement account, or I could see my retirement go south. How do I find you to get that handled?
You know, Dave, there's two things I think people need to be aware of right now, and that's risk in their portfolio. What is their risk number, and how does that compare to their current portfolio? And number two is taxes. You know, you and I, we know we're in the lowest tax brackets we're ever going to see. And so it's making sure you have the right tax strategy for your retirement plan. Give us a call, 863-382-0037. You can go to my website, statlerfinancial.com, and you can click a link there to go ahead and schedule an appointment, schedule a 15-minute phone call, and, you know, whatever you're comfortable with there. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730.
All righty, and back here again tomorrow morning about the same time on Light. Phillip, I do appreciate it. We'll catch you then, all right?
All right, man. You have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.